Hey everybody, Alex here, and welcome to Momentum Charting. Today it's after market here on September 10th, 2021. I hope you are having a fantastic day, and if you are new to the channel, make sure and go down below, guys, and subscribe to the channel. You can go back and watch the past couple of my update videos, but as of now, guys, I'm seeing this market pretty well and pretty clearly, and if you want to be a part of that, you kind of want to get a bird's eye view of my way of thinking, my technical analysis, how I'm seeing things develop in the market. Definitely the only way to do that, the only place you're going to get the kind of information that I'm giving here on YouTube, anywhere online, is here at Momentum Charting, and the only way to make sure you do not miss a single update is by subscribing to the channel. So, guys, with that out of the way, let's kind of dive into here to the charts and see what happened. So, the last update we did was here on after market close on September 7th. So this candle right here. And what I came out with in that video was, I said that I foresaw the market's a potential downward move slash, I didn't really want to call it a correction, but I did call it a downward move of somewhere between, I thought, maybe 2.1 and 3%. And it has actually developed fairly nicely here, guys, but not exactly in the way I wanted or the way I necessarily was thinking, because, guys, these markets are tough right now to get any sort of push to the downside, right? I mean, even though so far on this move, it's been doing basically what I saw happening and what I wanted. This has been really, really choppy in here, right? Super choppy. And the real biggest part of that downside movement has happened basically at the end of the day, Thursday and Friday. But you know, the action just the last couple of days has been really, really choppy, really up and down, even though prices towards the end of those days have been forced to the downside. If you're like in some short positions or short-term SPY options, something like that, it could have been a difficult ride, but definitely price is acting in a very similar manner to how I thought. And let's just take a look here at exactly the amount of downside we've gotten since we last talked right here. So I was saying somewhere between 2.1 and about 3%, I thought, and so far at the low of the day on Friday, down 1.46%, guys. So, you know, not far off from my prediction so far, but I don't think that this correction is quite over yet here, guys. So I've got good news and bad news, and I really think just the way that this correction to the downside here has been just so choppy and hard to get prices down. I think, guys, that when we do bottom, right, wherever that is, wherever we bottom at, whether it's here at the 125 EMA, if it's somewhere closer to the dynamic trend here at around 434, I'm expecting one of these areas, though, to kind of act as a strong support. So that would be either here around 443, here around 438, or closer to here, maybe around 434. But you guys know I like to plan in advance, but I don't like to try to necessarily say, okay, the end of the correction is here without seeing some substantial evidence of the downtrend or uptrend, whatever the case is, being over. And as of right now, guys, I do not see any evidence whatsoever of this downward trend ending, and I'm going to show you all that right here, right now. So in order to, I've got so many things here to show you, and I'm going to try to do it as quickly as I can. I don't want to take up too much of your time, right? But I do have some things I want to show you. So first of all, I'm here on our momentum chart on a 30-minute trend. You guys can see this momentum still operating here to the downside with a series of lower highs, lower lows over the past couple of days, and that has not ended yet, and we have not seen the rounded bottom starting to push back to the upside. We have not seen the break yet of this downtrend line like we got here in August, which signified the end of this downtrend here, right, in August, waiting for that. So that would be one thing I'm looking for, right, for the 30-minute momentum to start breaking back to the upside, rounded bottom, break this trend line. Also here, I would like to see on a 30-minute time frame. I think that the bottom is going to come before, but just the fact, right, that this this downtrend has been just such kind of a grindy, hard to develop, even though, let's see, maybe the biggest part of this downtrend and the fastest part is coming over the next couple of days. But of course, I mean, it's more than possible, right? Monday to have this thing. So I've got this trend line here on the 30-minute. I'm going to want to watch this trend line very closely. To me, that would be the most comfortable place to say, okay, Alex, this is the end of this downtrend. Get some structure in place, breaking back with some candles over this 30-minute trend line. Okay, that to me is going to be a definitive end to this downtrend. But, you know, the way, the shape and form I've got this trend line drawn right now, that could be almost the entirety of September away. And I'm not sure. I don't think that this downtrend is going to end to last that long, even though we have in the past over the period. I don't want to go back and look in the chart right now, but just take my word for it. Over the past year or so, we've had some pretty long, drawn out type corrections that have been more than just like straight down and then a V-shaped recovery. Although that is a possibility, I think this time, once again, the same thing that's happened the last like 3 or 4 times on a correction. But we've also been getting some corrections over the past year or so that have just been like brutally long and gone up and down and then pushed back down and sideways for a time period of a month or so, right? Trying to fish a bottom, trying to push up and doing neither and getting stuck in a range for the period of a couple trading weeks. And it's just, that's really, really ugly trading period and a time period where, as a trader, where you absolutely hate these ranges, unless maybe you're a day trader or something and just trying to capture the most minute time frames in a market. But you guys know that's not really what I do. I'm more of a swing trader, midterm trader. So I like the bigger moves over the period of days and weeks in markets. Nothing. I'm never concentrated on the intraday stuff. So to me, this correction right now, and I'm going to show you guys on the chart of the VIX how I think that this can start taking a bunch of different forms here, but definitively we want to be careful in here until we start seeing some sort of structure that's allowing us to get out of this downward pressure in the market right now, and that is just not developed yet. This thing could certainly on Monday push back up here, and we could potentially throughout the next week of trading come all the way back up here and hit the top of this channel right here and then start our next big decline. In one hand, I guess that would be good for short-term traders, and that would definitely, to me, set up another trading opportunity to catch another low of approximately, let's see what this one was here, around 1.6 to 2%. So that would be one thing to watch for if prices do on Monday, Tuesday, Wednesday start pushing up again towards this trend line. Watch for that to break down again here, right? And from there, get some short-term volatility pushing the market back to the downside. But of course, the other way that this could develop is just to continue Monday, Tuesday, Wednesday pushing down here, which certainly seems like a logical way for this correction to continue. Being is that we are starting to dive in here to a negative momentum area, right, on the momentum chart. And this is where you get the biggest pushes to the downside on momentum, when you get these big moves to the downside that happen below the zero line, which is really what's starting to develop here now on this momentum. But guys, on the other hand, we could certainly be in a position right now where there is really not that much left to go on this correction, or heck, any left to go on this correction. We could start working back to the upside. But what I'm going to want to see to prove that is, yes, a couple of things. One of those is going to be, like I mentioned before, the break of this momentum back above this trend line. I would hope to see the prices and market break back above this 30-minute downtrend line on price. And there are other things I'm going to want to see as well. I'm going to outline those for you right here. I want to start seeing some structure on a 3-hour time frame, right? This was a kind of the thing I showed you guys on the video on I guess it was the 7th. I think that was what, Thursday, right? So I do want to see a breach back above this 3-hour trend line, but I also want to see the formation of these candles in a structure that's going to allow us to break back to the upside. You guys see right now how we're getting these series. Let me try to zoom in here so I can illustrate this for you. You see how we're still getting this series right now of wicks that are not pushing to the upside, and you're getting like these lower highs on these candle bodies, right here, lower highs, lower highs, lower highs, lower highs, and then lower lows on the wicks. You see how we're getting that? So I want to see some structure in place, more to this degree here, where we were starting to get, at a minimum, the wicks, right, pushing to the upside, and we were able to break, this 3-hour line of downtrending resistance as well. So you guys could see here, see how these the wicks were starting to push to the upside here, and eventually we started getting these green candles here with bodies of the candles breaking higher. So this is, when I say structure, this is the type of structure I'm talking about on a 3-hour time frame that I would like to see on this downtrend for us to, for me to confidently say that we're starting to push back to the upside in prices. And I'm just not seeing that. And I just want to, it's never a good idea to try to determine ahead of time exactly what markets are going to do. And definitely you don't ever. This is the problem a lot of traders get into. They say, okay, well, over the past, let's see, 6 trading sessions, prices are down 1.76%. So they say, oh, okay, well, to me that seems like, they go with their feelings, they go with their gut, right? Or they go with past corrections and they say, it seems like now's a good time. Prices are down almost 2% over the last 6-7 sessions. I think now is a reasonable time to try to fish a bottom. Let me buy at the end of the day today and just hope and pray and see what happens Monday. Guys, that is not my trading style. That is when people get in a lot of trouble and they think that this low is the low, and then this thing Monday, Tuesday just, starts moving down in a big way, and we start moving all the way down into this dynamic trend and all the way towards this 250 EMA, and this 250 EMA is finally what acts as support, and they think they're bottom fishing here. Well, 446 is a good price, only to find out, over the next week and change that we're down another 20, 30 points on SPY, right? You don't want to be that person. You don't want to be that trader who's needlessly trying to anticipate the bottom of a correction without some evidence. And that's what I'm here for, guys. I'm gonna take everybody through this correction to the absolute best of my ability. And when I'm seeing a bottom, obviously I'll let you know. I'm going to be updating the chart of the SPY here at probably once a day over the next week, just to try to get us out of this correction that we are now in. Again, make sure you're subscribed to the channel so you don't miss any of those updates. So that's kind of what I'm going to want to see as far as a move to the upside here on a daily time frame. Also, same thing. Let me just move this up because it represents basically the same thing. I'm going to kind of want to start seeing some, us breaking this momentum, downtrend momentum that we're in now. the lower wicks on a daily, the lower highs on the candle bodies on a daily, which you can see happened here. We got that first nice green candle here on August 20th, started getting those higher wicks, higher candle bodies. As of right now, we are not seeing anything like that on the SPY. But again, you know, I'm thinking the fact that this downtrend has been so hard and so grindy to get started. I just think that when the bottom comes, it is going to snap back. I'm not foreseeing really a long and drawn out correction here over the period of many weeks. I just don't think that's going to happen. But again, markets can surprise us, and we just need to watch this closely, watch this carefully. And we definitely have some guides in place, this trend line on the daily, and like I had drawn here a second ago, the trend line on the 3-hour and also the 30-minute trend line here on our momentum. So we have some really good tools that's going to help us pull out of this sort of tailspin the market's been going through the past couple days. In addition, let's open this up here because I've got this DRSI. You guys can look at that and see what's happening here. You guys see over the last, let's see, how many corrections has this been? I just don't think that this correction here, I don't have evidence in place right now that there's going to be a big difference in this correction from what's happened the last 1, 2, 3, 4 times. I'm not seeing it, right? I'm just not feeling that right now. So I think that the maximum drawdown of this market is going to be a DRSI, something similar to what we had happen here in July. And we're going to hit a low of maybe 27, somewhere between 30 and 27 here, right? So we had these other drawdown points here. And as you guys can see, we're not there yet, right? We've got maybe another day. I'm thinking in the back of my mind, the biggest parts of the rest of this correction are going to be Monday, Tuesday, next week. I'm just thinking that in the back of my mind. But again, you know, it's hard to predict in advance that type of stuff. We just have to watch it because, you know, this could have some sort of pullback here, Monday, Tuesday, Wednesday, and then, you know, Thursday, Friday, markets cave down and continue this move down in the RSI. So we kind of have to be a little bit careful here and watch that. But I'm definitely going to be watching these levels somewhere between 27 and 30 on the DRSI for a bottom of this, and watch for a, let me get my drawing tool out here and just erase this arrow. So I'm going to be looking for a break back above this trend line somewhere here on the DRSI to signify, and with a confirmation, you know, that would be a break to the upside, break to the downside, break that to the upside, sort of a you know, classic trading levels pattern, if you want to call it, something like that, with confirmation back to the upside to let me know that RSI and prices are most likely ready to start moving back to the upside, right? So we've got a number of tools in place here, watching candle structure, watching 3-hour time frame, watching daily time frame, watching 30-minute time frame. So I've definitely got the tools in place to watch and see where the end of this correction is going to be. And I do believe that at some point here, this correction is going to end, and we're going to start pushing back to the upside in a big way, just like it's happened the last 4 corrections, and take us up again to new highs, right? Now, whether that's somewhere around 455, 460 on the SPY, somewhere around that. And just watch again for the same thing, kind of one of these really choppy, grindy moves to the upside, and then watch for the next move to the downside where we can start catching this volatility to the downside and entering SPY puts at a super cheap price, waiting for the next downturn in markets. I mean, guys, you know, you've got to take what the market gives you, right? Right now, this is the market. The move the market's been giving us is these V-shaped recoveries, higher grinding markets for a week to 2 weeks, and then a collapse in a short period of time over 3 to 5 days, and then chance to buy a low if you can hit it, but they tend to happen very quickly, and then prices grinding all the way back up. The market is just not giving us a ton right now, guys. This is a slow bleed to the upside, and we cannot tell the market what we want it to give us. We just have to follow along and take what the market gives us. Right now, this is the pattern that's happening in the markets, guys, and we just have to live with it, right? For better or for worse. So lastly, I just wanted to draw your attention over here. Let's see, what time frame did I want to use? Yeah, the 30-minute works well on this momentum chart. I can change it up too if we don't getting kind of the look that we like. But I think I was looking on the VIX at this 30-minute time frame, right? And so let me draw your attention to this. Let me get rid of that. Get rid of this. And just draw your attention in here. So I've got a lot of tools. Just like I've mentioned in other videos, I got so many tools in my toolkit here to help us get out of corrections. And I mean, you guys have seen in the past, like my pinpoint accuracy, right? On corrections and moves to the upside. It's not just by luck, right? It's not just by accident. I've got a lot of different tools in the toolkit. I like to use, obviously, the momentum indicator. I like to use my RSI, and I love to use my trend lines. And you guys know for broad picture on the SPY, corrections on broad markets, I always like to use the chart of the SPY, and I like to see this volatility index as well and use that. It's not just by luck that I'm calling tops and bottoms, right? It's absolutely 100% not. It's through the utilization of about 10 tools, of 10 of the most important tools I have in my bag to try to nail these tops and bottoms to the best of my ability. I'm going to continue to do that for you guys the best that I can. Obviously, the rest of this year, make sure you subscribe to the channel, but here we go. So this last period of volatility that entered the markets here was 13th of August and ended up dissipating around the 23rd of August, so around 10 trading days. And we had this sort of interesting, pretty steep line of support that entered the market here. And the interesting thing about the current state of VIX right now, you guys can see this the scope and breadth of this trend line is just not, it's just not as strong as this last one, right? So does that necessarily mean that markets aren't going to fall to as much of a degree? 100% it does not. But I think that what it means is potentially, again, going back to what I was saying about over the past year, there have been some more long drawn out corrections. I'm just opening up the possibility that this correction is going to be a little bit longer and more drawn out than people are thinking. And I want to follow this VIX up closely. And to me, for a complete normalization return of markets, what we need to have happen, just like we had happened here, a breach to the downside right around August 23rd. Let's see what that did here. Yeah, right here, August 23rd, right here at this time period. This is when volatility ended and we started our big grind to the upside again, right, in the broad markets. So that's what I'm expecting here. And in order for that to happen, the grind higher part and the end to the volatility, what we really want to see and what we want to have happen eventually is for this volatility index. I've used the proxy VIXY to eventually come all the way down back here and break this 30-minute crucial line of support that I've got. And I've drawn this out just as a basically a correct. I don't think necessarily it's going to happen like this. Let's see. We can just mess around with this. Say Monday, Tuesday, we blast to the upside in the VIX, and that takes the markets lower, and we do end up getting sort of this V-shaped recovery that we've been getting in markets, right? It's a little bit up, a little bit down. They're just slowly bleeding off. That would anticipate a return to the grind higher in markets somewhere around September 21st or so, somewhere in there. But then again, guys, in this period here, we need to watch for a pop in back to the upside in this volatility. So we've got a lot of things to kind of pre-plan for here. Just the fact that this this grind line here, this trend line on the volatility index is at such a kind of a degree, like almost like a maybe 30-degree angle, instead of like here back in August and July where it was closer to a 45-degree. But in the shortest term here, guys, let's get rid of some of these drawings that I made here. In the shortest time frame, in order what we need to have happen for the end of this current micro volatility phase in markets is on a 30-minute time frame. See how I've got this trend line set at the candle bottoms here. What I'm going to want to see is for Monday, Tuesday, get rid of that, go to our draw tool instead. We're going to want to follow this up, and where this takes us, this is why we want to be really careful, guys, because it's possible this thing could extend quite a bit further than either we are anticipating or anyone else is anticipating. We want to watch this particular trend line structure to see where this thing breaks to the outside. And I do believe that when we break this particular structure in the volatility index, it's going to be a violent return down to the downside, down to this trend line here at a minimum, right? Unless we break through that trend line. But this trend line here, just like happened here on September 8th, approximately, right? And let me show you that here on the chart of the SPY, September 8th. So let's see. So that was right here when we started getting that really volatile, choppy trading action for 2 or 3 days here. So I would anticipate something here as the volatility came all the way back to this trend line. And again, guys, for a return to complete normalcy in markets, our next grind line higher in markets, I do want to see this sort of short-term medium trend line break back to the downside, okay? And in a micro term, the markets are very much still in jeopardy until on a micro term we break this 30-minute trend line, have some candles break to the downside, and have this structure that is in place here since today at around 11:30 break to the downside. Okay, so we want to watch this closely Monday and Tuesday, see if we can get some just choppy sideways action on this volatility index and a breakdown to these levels, and maybe one more push lower or sideways, create possibly a lower high in here, and then that lead to the breakdown of this volatility that's in the market. So guys, I hope all of that was really, really clear to you. I know we've got, that's why it's a good idea for me to use my methods for you. You guys just watch my videos and get my feedback. But I do, for those of you who are interested, want you to do this technical analysis along with me. But for this particular breakdown in markets right now, at least a minor pullback, correction, something, whatever you want to call it. It's a little bit more complicated than just drawing a single trend line on a single chart. If I were to say what the single most important trend line for you to watch, let me go back here to the chart of the SPY, and I'd go on to this 30-minute time frame, right? This is the kind of the easiest thing that you guys would be able to follow along on your own charts. Let me just get rid of this mess here, clean up our chart a little bit. What I would say the easiest trend line to follow would be this one here. Connect these points here on the 3rd of September at 12 in the afternoon, and again here September 9th at 7:30 in the morning. But again, you know, that's kind of a shallow trend line, and I think that there's a strong possibility markets are going to do something closer to this, right? And they're going to bottom somewhere in here and have this. So if you're interested in capturing this part of the move, yeah, you know, you can draw a steeper trend line and follow along. But to me, this is the most important trend line right now in the SPY to follow along, and that's the one we're going to need to watch to start pushing higher in the markets and start grinding higher, pretty much like we were here towards the middle of August, all the way up towards the end of August here. So So guys, I hope that video was helpful. Again, I'm going to be following this correction carefully with a lot of interest, just because I want to do my best to catch the bottom of this trend for a number of reasons. Number one, I think that just the fact that this market has been so difficult to push to the downside, I think when this thing snaps back, it's going to snap back in a big way. And when we get a clear structure of markets, of candles, of the VIX breaking down, all that stuff in place that I just outlined in this video, I think we are going to push up to all-time highs in a nice way, and that's going to represent a really, really nice swing trading opportunity period. Who knows exactly what it could last, but maybe between the biggest part of these up moves have been somewhere between 3 and 6 days, somewhere in there. So I'm going to do my best to capture that and follow along every step of the way in my videos. So guys, thank you so much for joining me on this video, and thank you for subscribing. Again, I hope you're having a fantastic night. I hope to see you all again on the next update video of the SPY on Monday, and I'll probably shoot another video or two, general stocks over the weekend, just kind of see where we're at on some of the things I've been needing to catch up on. But if not, I will definitely see you guys again Monday in the next broad stock market update. Thank you for subscribing to the channel. I will see everybody again soon. Bye for now.